This voice is taken from an article with the title, "What is the Impact of Inflation on Currency Values?" which has been published on TraderTalks.net. Inflation is one of the most important macroeconomic factors to consider when trading Forex. Inflation impacts currency values by affecting the purchasing power of a currency. A currency's purchasing power is the amount of goods and services that C and be purchased with 1 unit of a currency. Inflation affects the exchange rate of a currency, which is the price of one currency in terms of another currency. When the rate of inflation in account Y increases, the value of its currency decreases in terms of other currencies. This is because the purchasing power of the currency has decreased. When the rate of inflation is high, the currency is not as attractive to investors, as they can get more goods and services in other countries with their investments. This leads to a decrease in demand for the currency and a decrease in its value. On the other hand, when the rate of inflation in a country is low, the value of its currency increases in terms of other currencies. This is because the purchasing power of the currency has increased. Investors are more attracted to the currency, as they can get more goods and services with their investments. This leads to an increase in demand for the currency and an increase in its value. Inflation also affects interest rates, which in turn affects currency values. When inflation is high, central banks usually increase interest rates to make borrowing more expensive and reduce the money supply, which in turn reduces the rate of inflation. This leads to an appreciation of the currency, as investors are attracted to the higher interest rates. On the other hand, when inflation is low, central banks usually decrease interest rates to make borrowing cheaper and increase the money supply, which in turn increases the rate of inflation. This leads to a depreciation of the currency, as investors are not as attracted to the lower interest rates. In conclusion, inflation has a significant impact on currency values. When inflation is high, the value of a currency decreases, and when inflation is low, the value of a currency increases. Inflation also affects interest rates, which in turn affects currency values. Therefore, it is important to consider inflation when trading Forex.